Brano, Global Chief Market Strategist with ATFX. Let's take a look at the markets, and we'll begin with the euro. As well in the chat box, if you have any questions about the markets or just want to say hello, most welcome to just put in something here in the chat box. Now, if you can't access the chat box, it's probably because you're not logged into YouTube. It's totally free to sign into YouTube and create an account with YouTube. A cool thing with that is that you can actually like the videos and you can subscribe to the videos. So you can subscribe to the channel, and next to the subscribe button there's a little bell button, and you can also click on that bell button, and that will give you access to getting notifications when I do these webinars and when we upload videos. So I usually do one webinar a day. So in the chat box today we have Tim Hollingsworth. Good morning to you, sir. And we have Marvin as well, saying good morning, Alex. I hope you're well. Doing very well, thank you. Beautiful day today outside in London. Definitely helps to cheer up the mood. And we have Ronnie Giles as well. Good morning to you, sir. Hope you're doing well. So let's take a look at the markets, and we're gonna begin with the easy part, which is just the euro. The euro is easy because there's not much happening here, and when the market is trading sideways like this, anyone's guess is as good as mine, really. And what I prefer to do is to avoid this market altogether. And for now, the price is trading between 114.10 and 110.28, and I think we'll continue to trade sideways here. And with both central banks, the Fed and most likely ECB now going to cut rates in September, we're going to continue to have these issues. On the other hand, look at something like the New Zealand dollar, right? So this is the New Zealand dollar, and the central bank just cut rates, right? So you can clearly see how the market slid yesterday, and maybe now has resumed this uptrend. In fact, for quite some time, the central bank here has been rather dovish. It's the same situation with the Aussie dollar versus the USD, with the markets clearly going down. Of course, with the Aussie dollar, they have issues that they are so closely linked with the China. So that's where I would focus on. I want to focus on something like this, where both central banks are going head to head, and there's obviously difference between the economies, but nothing enough sort of to get people excited and trading this. GBP versus the USD, I think it's going to make a bit of an attempt to trade upwards. So it's been here since July 30th, and as I've been saying many times, I think it will probably trade slightly upwards, because if you think about it realistically, say that we want to short, right? So we want to short here. And where's the last major stop? Well, you could argue you can work with the stop at 22.50. You could also maybe put it at the actual high, which is up here. So you can see here, this is like 3% or 365 pip. Now, to make a risk-reward ratio of 1-to-1, you need to see the market go down here to something like 118, which again, it wouldn't be unsurprising given the current situation. However, I think you would be asking too much here. Risk-reward ratio is rather balanced, and I think that could be a bit of an issue. So I think, what if we go up instead, maybe to 23, and then put a stop loss up here? Well, if we just revisit the low, you get your 1-to-1. But if we go down to, say, the pattern target of that failed inverse head and shoulders, you get a 1.57 times risk-reward ratio. And if we would tumble even further to some other levels, like 116.54, which I don't actually remember now, I had arrived. But if you go lower, in a sense, you get slightly, you now get better and better risk-reward ratios. So that's why I think no one is really selling here. Now, I saw this on the FT today. US is ready, pen in hand for trade deal with the UK, says Pompeo. So this is going to potentially be something of a driver. Indications, maybe details. I read the article. It doesn't say too much what's actually happening, except that Dominic Raab and I think some other prime minister from the UK is over there, and I met the different teams over there. Same team that is negotiating with the Chinese. So maybe they can do something good. But reading this article, there was not a lot here of any details at all. But things like this could potentially sort of start to drive the market and maybe give a little bit of a boost to the pound. And obviously, if they come up with some very good deal, then suddenly people start to say, oh, what's the, how is that going to influence no deal Brexit and things like that. So I think that could be it's definitely something to pay attention to, and that could potentially lift things, right? But again, I think 23, 24, I think that's the way forward. Probably reverse here and go lower. As for the actual stop, I'm thinking like this. Um, yes, we can put the stop loss up here. That will be at the exact high. But realistically, if we go all the way up here, that would be a sign that maybe things have turned around. So that's why I'm working with something like 24.66 or so. It really depends on what happens when we move up here. If it goes up strongly and sort of looks like it wants to squeeze itself out, then obviously you don't necessarily take a position immediately, and then you can decide, okay, here or here. Dollar versus the Japanese yen. So remember a few days ago I said you can short sell up here for this to go down. It did go down a bit, and then I said, well, you probably want to close out that position and wait for that retest here. The reason for that, because I thought stock markets were going to bounce, but I was wrong in saying that, because this did not catch up at all. It might still catch up, but obviously just being short here would have been good, because you would have got about 114 pip reward. Now, let's not cry over, spilled milk. It is what it is. So we're just about 105.46. Take these level out, and people, the bargain hunters, will get under a bit of pressure. You can probably see the price go down to 104.56. And then I'm gonna sort of continue to sort of suspect that this is gonna be probably the better sales level. Because if you look at something like the S&P, the market is now going upwards, right? And like I said yesterday, let's see if I can find my article. So I did an article on the, I think I did an article on the Dow actually. See if I can find my works to begin with. Here we go. It's actually the Dow Jones. Dow Jones, S&P, they all kind of look the same. If you look at it from a bigger picture perspective, the Dow Jones, I mean, if you didn't know about trade wars or rate cuts, imagine you don't know nothing. What would you have said? What about this prospects of this market? You would have said, well, this is an uptrend. You have a low here, another low here, and we just bounce from here. And so here in the Dow, which you can translate directly into the S&P, I think, people bought here. If we revisit these levels, people I think gonna buy again. Don't necessarily want to jump, go long immediately. You need to, in this time and age, you need to observe and see the price action at these levels. But the general idea is, so I'm sure about 24,597. I think we can go upwards. Now, in hindsight, it's very easy to say, okay, we should have bought here, And yes, people that bought here, or people that bought here in the S&P 500, are probably going to keep this maybe to 29.20. But then I think they're going to try to book profits here, if not a little bit higher. And then at these levels up here, people that are very bearish, they're going to try to short sell. Now, if I'm right about this move, that moves continue, then that should lead the dollar yen up towards the high again, especially if the S&P suddenly is trying to challenge this level here. Now, that's what I think is going to happen. This is probably going to go up. I think the dollar yen is also going to go up, but it's okay to buy something like this at the right spot because it has that uptrend. The dollar yen has a downtrend, so I would not be buying that dip. And what's going to happen here then going forward? Yeah, we'll go up, and then I think up here people are going to try to short sell again, and then we're going to probably go down. And then unfortunately, the way this looks like right now, we will probably get squeezed here. So this market is probably going to go into some sort of a triangle, I suspect, where the market does probably be something like, we don't have the high here, so I don't know exactly how that's going to look like, but I think we'll start to do something like that, and then eventually it's going to be bullish or bearish. That seems to be the more likely thing, because I think I explained this yesterday already. We have a situation where people are selling on the back of the comments by Donald Trump. However, that's going to kick in September, and it's October, November, December where you should be starting to see some bad data on the back of this. higher inflation, which maybe will limit how much the Fed can cut interest rates. It might be a situation where personal consumption or consumption declines and things like that. And that's when I guess this more wave of bad data should come out, uh, which means that from now until maybe October, November, we could potentially in worst case trade sideways here. What else? Gold. Let's talk about gold. Because this is gold, and the gold is just continuing to gain, right? And again, it's about that risk reward ratio. So when we're trading down here, I said we have that flag pattern, and that's my next target. So if you buy up here and you target that high, and if you put your stop loss at the nearest low, you're gonna have an inverse risk reward ratio. You can make $46 per contract, but you could, in worst case, lose $68 per contract. And that's why I've been waiting for that pullback. And we haven't had it so far. If we have a 50% correction of the rally from here to here, so I took the stop level as the base. Some people, of course, gonna put their stops here, so they're gonna take the fib here. But I think now, something sure about this level here will be on this other side of the market, because I explained this concept before, but it's a little bit like you go into a room. So okay, so you have a wall and then you have a door, and the market does like that, and then it goes through the wall, goes to the other side, and on the other side there's another room. So when it gone into that room, this literally sort of seals up to some extent, and then it does like that, and ping pongs from the other one. So we are now focusing on these levels. We're in this range. Of course, if the market would do like this, then it does like that. So in my head, I separate things like these in intervals, and that's exactly what this is. So if we pull below this level, we're gonna target this level down here and probably go all the way down here. On the other hand, we're now on this in this space, and the next target here of this room is up here. It was initially this section, but now we're here. Now this by itself, it went straight through that level, right? It didn't care too much. So this is not necessarily a new room. So we're not in this new interval. That interval doesn't exist. I just kept it there so I can show you how we reach this target that we discussed when we're down here. So we can actually get rid of this now. And then again, this is the stop, this is resistance, and if we put the stop here and we hit that high, then you're looking at 1.74 times risk reward ratio. And if we do it good, or not do it good, if the market just goes down a bit and then goes upwards, then we can just take the stop loss, just put it here. So your effective stop loss, or your effective risk reward ratio, would be about 3.21. And then I think we can still go higher. Remember, we talked about this one, that massive inverse head and shoulders. Again, this is one space, right? So the market was trapped here, and then it broke through that level, and the next major high is up here. So this is your whole space. So now we're just in the beginning here. Even if this would plummet on the weekly, as long as you're trading on this side of things, which is about 1370, you're still gonna be in that space, and we could still go upwards. And then again, this is supported by inverse head and shoulders pattern. This is the target of an ascending triangle. The only thing you need to make sure is that you don't get stopped out in the way, which again is very difficult, because you will be stopped out throughout the way if you're working with tight stops. So again, I want to buy a dip if possible. That's going to give me some decent risk reward ratios, and I'll be bullish as long as I trade about 14.29. This is crude oil, and crude oil is just above this low here, and it tried to challenge it, but there's talks. Apparently, there's talk between Saudi Arabia um, and its partners to see if they can figure out how to limit the slide in crude oil prices, and that caused the market to bounce, and we're pretty much within this range. And it looks like, this triangle-like thing. Well, actually, we broke out from that triangle, so that triangle thing is not there anymore. However, horizontal support and resistance is far more important, I think. This and this. So the way this is looking, I think this could potentially go upwards. Now this is interesting. We don't have to trade this market. If you really want to trade crude, something I noticed yesterday that because I haven't paid attention to it for quite some time, is Brent crude. I know it looks rather similar, but it's still a bit different here, because you have this level here and this level, or these two lows here. So these levels align rather good, or rather perfectly, really. Now this would be a descending triangle, and the descending triangle is something that is far more tradable than your normal triangle. In fact, I try to avoid any regular triangle unless it's part of a bigger pattern. So here, that's the base. I would suggest you do not work with the base. I suggest you work with somewhere in the middle like that. So it's still a $10 slit here. So that will be sort of your potential target here. And here is far more interesting because you see we traded below the low. And here, if we have a retest of that breakout point, and then you have that high here, you're looking at a reward ratio of 1.81, which is rather good. So this is better to focus on rather than the West Texas, which is with many traders is called US oil. Okay, let's see here if you guys have any questions. Actually, we got the German DAX. Here's the German DAX. All right, the German DAX has declined quite strongly, and not only that, it slid below this level, which should have opened up further weakness, which did not happen. At the same time, US stock markets are going upwards. So I'm guessing here you can have a bit of a correction, maybe up to 11,939, maybe 1,000, 12,000, and then we'll see what happens. But I think the way this is looking, it looks like it's trying to bottom out here. And at least in the short term, as long as you're above 11,558, this is going to be a bullish trend. Okay, guys, let's see if you guys have any questions. So we have Abu Bakar saying good morning. Good morning to you, sir, as well. Hope you're doing good. If you wonder what I'm doing, I'm just going to look here. I had an entry order on. I just want to see if it get triggered. Okay, so it looks like you guys don't have any questions, which is okay. So we're gonna wrap things up. Yes, before I forget, Investing Cube is now on Telegram. So that's the link for Telegram. We just set it up like 2 days ago. So if you want to subscribe to us on Telegram, there you go. It's you just need to click on that if you're on your mobile. If not, it's t.me/investingcube. It's a link as well. There's most of our articles. So Telegram is a bit like WhatsApp if you have that. So in essence, you get a notification every time we post something. You can of course disable that. So every time we post, you get the title. So you can see, without actually, you just pick up your phone and you can see, okay, what's the title? We just posted something. So if an article sounds interesting, you can load it, you can see the chart here, and then you just click on the link here, and it will open within the actual Telegram platform. So we just opened this, and it's totally free to join. Okay, We're also on Twitter as well if you're not on that. If you're not on Telegram, and the Twitter handle you can actually find it here. So it's at investingcube.com. Let me send you the link to that. It's also in most articles, so you have that as well, so you can keep in touch. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow for the next market update at 9:30 a.m. London time. Don't forget to subscribe as well on YouTube and like the video. Thank you, and have a great day. Bye-bye.